If you're thinking of buying a condo, there are a few things you should know. Buying a condo is a little different than purchasing a single family residence. The first thing to keep in mind is that you're going to need to establish if it's truly classified as a condo. To do that, you have to look at the legal description and read it. It's going to tell you if that dwelling is actually platted as a condo. This is something your experienced real estate agent will help you with and do for you. It's important to note that you can't trust what it says in the MLS listing service. The listing may say townhouse or apartment loft, but it could very well be a condo, which means that from the lending perspective, the process is a little different. And here's why. When purchasing a condominium, the lender is not only going to make sure that you qualify as the buyer, but they're also going to want to make sure that the condominium project meets the lending guidelines. The way that lenders do that is by obtaining a condo questionnaire. Here's how it works. When the purchase contract arrives at the lender's office, the lender is going to get everything set up in their system, and part of that process is to reach out to the HOA and request that the condo questionnaire is completed. There's usually a charge for that, and that can be anywhere from $150 to $250, and this is a borrower-paid fee. Once the management company has released the condo questionnaire to the lender, then the lender is going to review it and determine whether that condominium project meets the lending criteria. This is really important because condominiums are the only dwelling type where lenders are actually going to really focus on the project and all that's happening in there. And that condo questionnaire, it's about 30 plus questions. So there's a lot of information that we're relying on to get from that HOA to be sure that the condominium project does meet the lending criteria and guidelines. Working with a mortgage lender that understands condominiums and how to interpret these homeowner association questionnaires is so key, because I guarantee you they're not all black and white. There's a lot of gray area, and being able to review the condo questionnaire and compare that to the lending guidelines is half the battle. The other thing to note is that the interest rate and terms on condos can be different when compared to a single family residence. There are going to be additional HOA dues that are going to be due at close of escrow. There's likely a transfer fee, potentially a capital improvement fee that's also a cost that will be paid at escrow. You should know that interest rates are slightly higher on condominium purchases. The down payment will dictate the terms on a condo more than they do on a single family residence. So lots of moving pieces when you're purchasing a condo. Now that's not a bad thing. There's fantastic condos in this country. And it's one of those things that just understand that it's a different dwelling type, which means that the lending process looks different. The interest rate process and closing cost process can be different for condominiums. If you have any questions, please post below and don't forget to subscribe. I have a true passion for home loan education, and I want to make sure that you are making informed buying decisions. Until next time.